Hi, I'm Suhaimie, Head of Kenanga Economic Research. Today I'll share with you our 2017 economic outlook. After a rocky start in 2016, global growth is expected to see a stronger pickup in 2017, particularly in the advanced economies. However, uncertainties from global events ranging from the progression of Brexit, policy uncertainties under the incoming US President Donald Trump, and rising regional tensions in the East Asia may limit upside to overall global recovery. Further concerns over the overall health of the Chinese and Japanese economies act as a further dampener on regional growth. Nevertheless, we forecast 2017 growth at 4.5%, slightly higher than 2016 with room for some upside. Oil plays a major part on growth and the government's balance sheet. Despite the implementation risk of the recent OPEC-initiated oil production cut, we see oil prices recovering to the $50 to $60 per barrel range, averaging about 55 per barrel in 2017 from the gradual normalization of oil inventories. The government's conservative 2017 fiscal consolidation target of 3% is likely to be achievable with room for greater fiscal space. Achievement of fiscal target will be supported by improving tax collection, recovering oil prices, successful budget rationalization, and gradual cyclical recovery. Given the constellation of positive catalysts, a greater fiscal thrust is possible without breaching the fiscal target, particularly given the possibility of a coming general election. Inflation is suspected to edge upwards towards the end of 2016 and into 2017 from cost-push factors ranging from subsidy rationalization and rising commodity prices, as well as a weaker ringgit. We reckon that these themes will continue to play out in 2017, bringing the full-year inflation at a higher but still manageable 2.5% this year. In the absence of further clarity of global event risks, we expect Bank Negara to maintain the OPR at 3%. Given rising global risks, global capital is likely to gravitate towards less risky assets and location in the developed economies and away from emerging markets, including Malaysia. Adding to this is that the US Federal Reserve has signaled and probably committed to at least 3 more rate hikes this year. Despite Malaysia's relative resilience to capital outflows, we expect capital flights and speculative pressures to be a predominant theme in the ringgit valuation for 2017. Volatility, especially from global risk, is expected to be a mainstay of 2017, with the ringgit trading within the 440-460 range in the near term, but to strengthen to around 435 by end of 2017, hopefully on the back of more stable and improving economic environment. That is all we have for this segment. I am Suhaimie. Till next time, have a great year ahead.